Lower tax on short-term capital gains or lower tax on long-term capital gains? What will you choose if somebody asks what you want from this year's budget? Well, I'm pretty sure you'll say both. But what is it that Indian investors are expecting from the Union Budget 2026? And is a higher exemption limit even possible on long-term capital gains and short-term capital gains? Let's see what experts have to say about this. Market participants are expecting an ease in capital market taxation. This also includes a higher exemption limit on long-term capital gains. Retail investors are also suggesting the government to further avoid increases in transaction taxes. So in short, investors are seeking some tax relief from the government on long-term capital gains. Investors want the government to enhance the exemption limit on long-term capital gains. Experts lined up with NDTV Profit have said that government should refrain from raising the securities transaction tax on cash equity trades. For the unversed, securities transaction tax or STT is a direct tax levied by the Indian government on the purchase and sale of securities on recognized stock exchanges. Securities like stocks, derivatives, equity mutual funds. This type of tax is charged at the time of transaction collected by the exchange. It varies by security type like equity FNO and trade type. So basically, STT is a cost for investors, reducing net profit and is deducted upfront. Now coming back to what experts have to say about it. Dheeraj Reddy, Managing Director and Chief Executive Officer of HDFC Securities, said that stakeholders have proposed keeping the securities transaction tax on cash equity trades lower than that on derivatives to encourage long-term investing over speculative trading. He also suggested taxing only the profit component of share buybacks and aligning dividend tax rates for domestic investors with those applicable to NRIs. Tejas Khore, Chief Executive Officer of FIRE, said that the government should refrain from raising STT any further. He added that reducing both long-term and short-term capital gains tax to 10% would significantly boost retail investor participation. Tejas Khore also expressed hope that import duties on gold and silver are not increased further as these assets remain important hedging instruments against equity market volatility and rupee depreciation. In its budget wish list, brokerage firm JM Financial Services recommended that the government should raise the tax-free exemption limit on long-term capital gains from 1.25 lakh rupees to 2 lakh rupees. The firm also sought to standardize the definition of long-term to 12 months across all asset classes, including equity, debt, gold and real estate, to reduce complexity and improve tax clarity. Additionally, it also called for allowing capital losses to be set off against income under other heads. Market participants have also cautioned against any further increase in transaction-related taxes. Finance Minister Nirmala Sitharaman will be presenting the Union Budget on 1st of February 2026. So as the Union Budget is approaching, what do you expect from it as an investor? Join in the conversation and let us know in the comment section below.